What is going on, everyone? Today is Monday, October 15th, 2018. So I'm sure you've heard about the Tether controversy, but I think there is one piece of news which actually broke more recently. The Tether Bitfinex thing kind of happened earlier in the AM hours, roughly about 12 hours ago at least, maybe a little over 12 hours ago from the time of me filming this. This other piece of news that I want to cover is more recent. It's really good news. Again, going along that lines of institutional investors getting involved, but we're also going to talk about how Tether imploding essentially has an impact on that as well, whether good or bad. And also, I want to talk very briefly in this video about China, or Hong Kong more in particular, and some positive news coming out of there. So yeah, we can start off with this, which I consider pretty important news. It was posted on Cointelegraph, published by Molly Jane Zuckerman here. Investment giant Fidelity launches digital asset services targeting institutional investors. So very similar to Coinbase Custody. In fact, as we get into this, we'll see that they already have some collaboration with Coinbase Custody. Now, going along, as usual, with this theme of institutional investors, which will really push the market to new all-time highs moving forward, this is one of those tools that has to be utilized in order for that to happen. So if we jump into this article here, it says U.S. investment firm Fidelity, which administers over $7.2 trillion in client assets, has announced the launch of a new company, Fidelity Digital Asset Services, according to an October 15th press release. This company is going to offer custody and trade execution services for digital assets targeting institutional investors. Hedge funds, family offices, and market intermediaries, very similar to Coinbase Custody here, and will not be open to retail investors, just like Coinbase Custody is not open to retail investors. Again, Coinbase Custody is different from Coinbase. According to the press release, Fidelity Digital Assets will focus on providing a secure, compliant, and institutional-grade omnibus storage solution for Bitcoin, Ether, and other digital assets. Then it goes on to say about how they began looking into it a few years ago. The head of the newly created business, Tom Jessup, then tells CNBC that the new company will leverage all the resources of a big organization, and reported that Fidelity already works with over 13,000 institutional clients to draw these actors into the emergent space. So that is to say, to bring them into cryptocurrency, to get them involved, to give them a safe and secure way to get introduced to cryptocurrency and the market. And again, that's something that's going to help push the price up in the long run. To this end, the newly created company will draw on its reputation as a major Wall Street incumbent. And the article then ends basically, the investment giant's innovation lab has also had a partnership with major crypto exchange Coinbase, which I mentioned earlier in this video here, as of mid-2017, to allow clients to view their Bitcoin holdings alongside traditional assets in their portfolios. So this is just another step, more institutional custodial services being introduced, setting things up for the next bull run, essentially, allowing bigger and bigger players to get into this space, again, one step at a time, but further legitimizing cryptocurrency in many people's eyes. Many of you guys, we all know that Bitcoin and Litecoin, a lot of these top cryptocurrencies are legitimate, but again, there are still plenty of skeptics, in particular, even over the past 3 months, even though cryptocurrency really garnered a lot of attention the latter half of 2017. Some of that enthusiasm from people that were kind of on the fence to begin with has shifted more towards Bitcoin being a scam again. So this is setting up to really provide further assurance in the future and to help people and institutions in general get involved in the space and give it a good name for people who don't necessarily believe in it or understand it at all. I saw something on Twitter yesterday actually where somebody thought that there was like an average price that you had to, or an average fee you had to pay for any Bitcoin transaction, whereas he said, like, if I wanted to send $5 worth of Bitcoin, it would cost $60 in fees, which makes no sense. I have no idea why that person thought that. But no, the fees are dependent on the actual price of the transaction. So if you're sending a $5 transaction, there's no way you're going to pay $60 in fees for a $5 transaction for sending Bitcoin. That's not even close to the truth. It would be far, far less than like even 10 cents to do something like that. But yeah, before we get into the second one, as you can see here, you can see this huge wick up here. This is on Bitfinex right here. I put these at the same scale here. This top one here is Bitfinex, and this is Coinbase. As you can see, it did spike up to around $6,800 US on Coinbase, but on Bitfinex, it spiked all the way up to $1,000 more than that, $7,800. And we're still seeing discrepancies in the price of Bitcoin and other cryptocurrencies right now. As you can see, Bitcoin is $6,400 on Coinbase, and almost $6,800 on Bitfinex. So Tether on Bitfinex, there's a whole issue here, and I want to get into this article that kind of goes into a little more detail if you haven't already heard of it, but there's also some pros and cons of this that I want to get into this. And this article was posted, I believe, by, Joseph Young on Altcoin News. So Tether implodes in a 4% drop, an important step toward crypto market growth. Again, this was published on CCN. The price of Tether USDT, a crypto stablecoin backed by the US dollar pegged to $1, has fallen by around 4% in the past 24 hours to 96 cents. I believe it even went all the way down to about 92 cents, which is not good. The whole point of Tether is to be essentially a synthetic dollar. And if the price of Tether is not matching up with the US dollar, obviously you can see why there are some problems with that. As USDT fell, it became more expensive for traders to purchase major cryptos like Bitcoin and Ethereum with USDT, pushing the premium of cryptocurrencies up on crypto-only exchanges like OKX and Huobi. At its peak, the price of Bitcoin achieved $7,500 on Bitfinex. This article says $7,500 according to this chart here on TradingView of Bitfinex. It looks as though, $7,800, so $300 more than that. So this section here, titled Why Tether Sell-Off Could Be Good for Crypto, it says right here, in the long term, however, the decline of Tether could positively affect the crypto market as it will lead traders to regulated, audited, and transparent alternatives like Gemini US dollar and Paxos. And I want to skip down here, Paxos as well as TrueUSD, but I think that's very similar to USDT to begin with. I want to skip down here to the last paragraph of this portion of the article. With both Gemini and Circle are US-based regulated issuers and thus perceived as more trustworthy, carrying lower credit risk, one should expect a greater percentage of USDT holdings to migrate to GUSD and USDC, Circle. And GSUD is on Gemini. Gemini really is making a lot of good steps. If you are aware, it's something I covered and a lot of people covered a few days ago, that Litecoin was finally added to Gemini, becoming the fourth cryptocurrency being offered on Gemini alongside Bitcoin, Ether, as well as Zcash. Potentially Bitcoin Cash in the future as well, but there were some problems, and that is going to be delayed due to, I believe, a fork in Bitcoin Cash, so we'll see if that ends up happening. But the very last sentence here, what is next? Bitfinex has clarified that it has obtained the approval of its bank to enable fiat deposits and withdrawals in the next 24 hours. It's possible that the statement of Bitfinex could lead to the stabilization of USDT. I'm very wary of USDT, and I think many people probably are after seeing this. Again, just comparing these exchanges and comparing even the prices of Bitcoin to Bitfinex and Coinbase listings is just very, very disconcerting. About a $400 difference, which is a significant percentage difference there. And up until about a week and a half ago, they were the same price. But issues with Tether are leading to this, and I think it really will push people to look for alternatives to invest in cryptocurrency and maybe to not have as much trust in stablecoins. Maybe other stablecoins such as Gemini's stablecoin, but USDT, this is not the first problem they've had. Bitfinex as well. They've been, I believe, internally audited, which I think a lot of people are questioning how valid that is. But they've really never shown, I don't think, legitimate evidence on their USDT backing. So I'm very wary of that situation. And I think this is going to push people away from USDT and kind of give it a bad name, at least for now. We'll see if it recovers, and we'll see if something ends up changing with that. But the last article that I want to cover here, as we all know, in 2017, or maybe we don't know, cryptocurrency really was cracked down upon in Hong Kong, China. In 2017, the total ban on crypto exchanges is unnecessary, a Hong Kong regulator states, and this is a CCN article published today. The author here is Sambraj Das, one of the editors at CCN. The outgoing chairman of Hong Kong securities regulator has, unlike China, ruled out a total ban on domestic cryptocurrency exchanges, suggesting formal regulations instead. So this is good. I believe at one point China was definitely the dominant force in terms of the volume in cryptocurrency back in 2017. But as for now, China has been a very small player compared to what they were historically in the cryptocurrency market. And if they can get their regulations and their laws in order and able to really effectively begin again entering the cryptocurrency space, I think that would be beneficial for the entire ecosystem, but also push the prices up to new levels, because China is a huge country. China was very interested, but their lawmakers have not taken as kindly to crypto as, say, Japan, South Korea, and the US have so far. But this is good news. They ruled out a total ban on domestic crypto exchanges. And again, that means they're suggesting formal regulations instead, which is a good thing. It's basically what we're seeing, or we could see, and this is a topic that's again brought up by what happened with USDT, Tether. If institutions are going to enter, we don't want things like USDT and other things giving it a bad name. We want them to feel comfortable and safe putting their, or at least investing into cryptocurrency. So Hong Kong Securities and Futures Commission is drawing plans in reaction to the growing appetite for cryptos like Bitcoin among retail investors and traders by regulating the sector. Chairman Carlson Tong Ka-shing is quoted here saying, "We do not think imposing a total ban on these platforms is necessarily the right approach," the senior official told the SCMP, remarking the traders will find ways to circumvent all barriers. Essentially what he's saying there is that traders are going to essentially find ways to enter the market anyway, so it's not necessary to put a total ban on platforms, but instead find a way to approach it more appropriately. If we were to ban them, transactions can still be easily conducted via platforms in overseas markets. And that was what a lot of people were saying back in 2017 as well, that the money would just have to be moved into other places in order for these Chinese investors to get involved in the space. But he also is quoted here as saying, "We need to see if and how these platforms can be regulated to a standard that is comparable to that of a licensed trading venue, while at the same time ensuring investors' interests are being protected." And skipping to the end here, the Hong Kong crypto market has been scrutinized by the securities regulator extensively in recent years. In March of this year, they shut down an ICO citing potential unauthorized promotional activities, and then the following month labeled many ICOs dubious downright frauds, which I can't necessarily disagree with. A lot of ICOs are, for lack of a better word, scams, as you could say. But that's going to be it for today's video, guys. Let me know what you think. Maybe leave a comment on your opinion on Tether, how you feel about the entire thing. Are you still using Tether? Are you hedging in Tether? Do you keep some of your portfolio in Tether in hopes of trading for profit? Is that what you use, or you use a different approach or a different exchange or a different stable coin? Please leave a comment below, but thanks for watching, liking, subscribing, and I'll see you in the next video.